Well, good morning, everyone. Welcome back to our DTS trading room. Hang on here 1 second while I get you my monitor. All right, so the market's just opened up. It looks like we've got a little bit of an opening gap relative to where they left off. So trading stopping down here yesterday, the North American session, around the 43.52 mark. Very quiet through the Asian and the European session, although we did see a little bit of a rally come in. And here we are with a little bit of a gap now above the market, which it looks as though, at least according to the first few minutes of trading, that the market is going to try to fill that gap. Let's see if we can get a signal here. We did get a first micro-macro cross signal here in the hawk just on the open. But that's all right. We'll kind of let it set its parameters. We'll see where the buyers are at now that we know the sellers are interested in shorting out of the open. We'll see where the buyers come into play. And then we'll see whether or not they try to actually get inside that gap, or whether they're going to continue with that opening range gap and continue higher. As with most things trading related, they can always be two-sided. Well, the market will do this unless it does that. The prices will go up unless they go down. See, I can be on MSNBC. Sometimes it's just a matter of waiting. Waiting. I've shared this with you before, but I see we have some new people in the room, so I'll mention it again. A lot of times when I'm trading, I don't get into the office until 7 o'clock, which would be, pardon me, a half hour after the open. I don't usually trade the open. The only reason I trade the open really is for you guys, because you're here. And, you know, that's the perception. Oh, the market's opening. I got to be there. I got to see what's going on. No, not really. Here, if we take a look here at yesterday's trading on the Eagle, and yesterday was a pretty good day, but take a look. Here's where the market opened more or less, and this is the end of the morning session right here. So what you're looking at from here to here is pretty much the extent of the morning session. So a nice little move up and a move down. Notice the first half hour or so of trading, not a whole lot happened. It wasn't until almost an hour later that the market actually began to rally. Now compare that with the rest of the day. Oh, you know, we finally pick up a trend later in the day, and the market starts to get some direction and get some movement to it. So even though we just focus on the morning session here in the room, you know, your active trading, or my active trading, really tends to be from around a half an hour in to, early afternoon. I will usually try a trade. You'll see me try a trade here. We're getting a little bit of a retest of the high here. We're working on a possible rule of three. Actually, I shouldn't be watching the eagle. I should be watching one of the other tools. Darn it. We had here a macro pullback signal, which would have been worth trying. All right, well, we'll just give them a moment here. See if they don't give me one more chance. All right, so here come the buyers again. It looks like we're going to get a chance here on the hawk. Oh, no, now we're fading. Come on, get into yellow bars. I don't want to buy you up here. Why? Well, because we've already hit the low twice. We've hit the low of the morning twice. It's being rejected twice. That's not a very bearish sign. All right, while we're waiting for that to sort itself out, Andrew says, Eric, when I use Trade Manager, I can't seem to get it to place more than one contract. It asks for second target, but does not accept it. Okay, well, that may depend on the quantity that you're trading. Now, we're just going to walk through here real quick how you set up multiple targets. So let's say we're going to take half on one target and half on the other. Oops. So 50% on target 1, 50% on target 2. So target 1 I have set at 20 ticks or 10 ticks. Now I need to set target 2, and let's say we set that at 20 ticks. Press enter, and now you've got your trade set up. So now when you go to set your trade, providing you can trade more than 2 contracts, or at least 2 contracts, you should have it set up to take profit on target 1 and a second target as well. All right, so try that, Andrew. If that doesn't work, let me know. You may just not have pressed the enter tab. Okay. So that early bullishness kind of fading now as the sellers are coming back. That did turn out to be a really nice little macro pullback signal. And I'm missing signals explaining stuff. Here we have another signal here on the Raptor. This one's pretty decent looking. This is your cloud crossover signal. And the cloud crossover signal on the Raptor occurs when the cloud crosses over, the market drifts into that cloud, comes out, produces a signal. Now this technically is the first cloud crossover signal. This one would pass as a cloud crossover too, because here the clouds are still kind of intertwined. Here it's more of a technically pure cloud crossover. Yeah, like William says in regards to my earlier comment about the talking heads on TV, oh, the market will go up unless the market goes down. He says it's just like the sports announcers, when they say stuff like, the team that scores more goals will win the game. Yeah, that's brilliant. I was watching a golf game once, a PGA event, and the announcer, the player was off of the green, and he had his caddy pull the pin, and the announcer said something like, "Oh, it looks like he's going for it." Oh, really? Isn't that the objective? To go for it? Or no, he said, it looks like he's trying to make it. That's what he said. It looks like he's going to try to make it. Yeah, no kidding. Tony's watching the British pound. He says, it looks like it put in a very nice rally earlier this morning. Okay, I missed a couple early chances to get into the NQ short here, but that's all right. It's still early. It's only 10 minutes, 12 minutes into the session. So now we're getting back near where we were when we finished yesterday, so we can pretty much consider this opening range gap filled. Technically, if you're following a gap, anytime the market gets at least halfways into that gap, most technical traders will consider that gap filled. At least that's one less thing to worry about, right? Whew. That's a load off. All right, we're just kind of waiting them out. We're back now into the median line here on the support and resistance suite. Nice little tag of the median line. I would have considered this signal here a late filter entry signal, even though the trend line went out of sync for one bar. It is okay if it goes out of sync for one bar. I don't normally mention it when you're just starting out because I want you to focus on the correct signal and not wonder, well, is one bar okay? Is 2 bars okay? Are 3 bars okay? But what's happened here is this bar probably went one tick too high, and that was enough to change the trend line over for a single bar. But the very next bar, it came back, it flipped the trend line over, it generated the signal. That would be worth trying, especially when you look back into the chart and you kind of look at the overall context of the thing, and you notice we've made the lower swing high. We've come back, we've retested now from the underside. This is pretty much everything that we're ever looking for in a signal. So you shouldn't hesitate to take that. Even if you choose to set it up a little bit wider, it's almost guaranteed that you're at least going to find your profit objective, which the market did right there, and then ended up going a little bit further off of a second signal. Okay, William is asking about the multiple signals we're getting here on the hawk. William asks, when you have multiple scalp setups as today, when is it not safe to trade? Well, what I tend to do, William, is I tend to focus only on the high probability signals, which means that the signals I'm most comfortable with are going to be the first micro macro cross and the macro pullback signal. The other ones I'm not real happy about, even though the market is continuing lower here. I was not keen on taking this signal right here. To me, that is a lower probability signal, even though when it was forming, it was trying really, really hard to become a macro pullback signal. So this signal right here is probably only one tick shy of becoming a macro pullback. So it did work out. But generally speaking, I only focus on the high probability signals. If you don't have the cheat sheet yet, send me an email and I will send it off to you. And the cheat sheet is this thing right here. So if anybody doesn't have that cheat sheet, I have one for the Falcon also. This is what the Falcon one looks like. So we're just focusing on the high probability signals, namely the trend change signal, the late filter entry signal, and the trend line touch signal. With the hawk, we're looking for the first micro-macro cross, the macro pullback, 4-arrow consolidation, the post consolidation, and the red bar buy, green bar sell. You'll notice there's several signals that print through here that did work out, but that I did not take. There's a signal right here, which eventually worked out. The trend was strong enough, it didn't really matter which signal you took. But the thing is, if you're focused on the high probability signals, you'll probably have a better degree of success. So here was yet another macro pullback signal. I suppose sometimes if you deem the market to be in a strong move, you can take any of the signals. So if in your judgment it looks like, wow, this market is really in a downtrend today. You know, we've broken support, we've come back, we've retested, and it looks to me like the market is just in a downtrend. Well, then go ahead and take any signal. Because sometimes it's actually, the NQ is plodding along quite nicely today, but it's not fast. Sometimes these things unfold and the market has just got such a brisk pace to it, and you know traders are selling wildly. Just go ahead and punch in. Just go ahead and sell. And unless you're doing something silly like selling near yesterday's low, which is where we're at right now, you should be all right. So, you know, to short this signal right here, well, I'm sorry, you're just really late to the party. The problem with just hopping in anywhere is sometimes not so much in choosing the direction. The problem is not so much in choosing the direction, rather where do you cover the trade. So if I decide that, hey, I have to get in and I just hit my sell market button and I happen to get in here and yesterday's low just happens to be, you know, 43.51, where do I need to cover this trade? Well, I should cover it way up here. Now, I know it's a huge risk amount, huge, even though we're containing our risk via our percentage. Oh, okay, well, I'm going to have to force it here. We're going to force a contract just so I can make the point. Okay, so I'm actually risking about 4% of my capital, but that's what it would take to make this trade work, and I certainly would not go for a $50 target here. But if you find yourself, if you firmly believe that the market is in a downtrend, then you've got to get short. Doesn't matter so much where you get short if you think the market is in a downtrend. Of course, now we're kind of in for the long haul, aren't we? That's why we need the deep, deep stop. Not to get the $50 target. That we would pretty much negate. But because we believe the market to be in a downtrend today, we can't afford to get stopped out prematurely if we just happen to hop in any old place. Hope that makes sense, at least a little bit. Okay, a quick little rally up as the buyers are defending yesterday's lows. Oh, excuse me, I had a sneeze coming on. Okay, some of you are looking at this first micro-macro cross here on the hawk now and saying, well, gee, Eric, should we take that first micro-macro cross and now it's into yellow bars so we can ignore it? But let's just dial it back here and pretend we're still getting a green warning dot. Should we take this, class? If we had a green warning dot here still, should we take the first micro-macro cross? Anyone? No one? Okay, William says no. Ryman says yes. Okay, so a couple people brave enough to step up. Andrew says, I wouldn't as it's in a downtrend. Okay, all good answers. William says no because it hasn't retested the low yet. We're looking for a test of the extreme. Ryman says yes because, hey, it's a first micro-macro cross. Andrew says no because of the downtrend. You're all right, but I would take it. What I would do, because it has not retested the extreme and because it's definitely counter trend, I would dial down the risk amount, either go in with a single or dial down my risk amount to only 1%. But it is a first micro-macro cross signal. It is a high probability signal. Therefore, I should at least try it. I would have to cover it below the low because this would definitely tell me I was wrong about the trade. But the probability of the signal actually makes it worth taking. Believe it or not, sometimes the DTS system sees stuff that you won't see. Now, the context is deadly important. The fact that it hasn't retested the low, equally important, because if we entered here, there's a very good chance it is going to try to reach lower, perhaps turn into a red bar buy, or whatever, and may actually end up threatening our stops before recovering. But yes, a first micro-macro cross is a high enough probability signal that I would consider doing it. So we came back with a red bar buy signal, which we could have bought, in which case it never got filled, or we could have set up for the failure of the signal and we could have shorted. But yeah, all good answers. You were actually all correct, but I would take the signal anyway. As uncomfortable as it would be, I would take the signal, but because of the trend, because of the lack of a test of the extreme, I would limit my exposure. Oh, way to go, Andrew. Andrew says he shorted that red bar buy. Nicely done. here on the Raptor, while we were looking that over, we had this nice little hard edge bounce. So actually waiting for that hard edge bounce, that rejection. The market coming up in here, kind of retesting these lows, testing the hard edge, coming out with a signal. Boom, down she goes. Okay, gold ticking higher, crude ticking slightly lower, and the NQ in a little bit of a tailspin today. Oh, way to go, Andrew. Andrew says he got 20 ticks on crude and 5 points on the NQ. Nicely done. That's a good morning. Good job. So you see with the earlier example how I was saying if you deem the market to be in a strong downtrend, it doesn't matter so much where you get in, so long as you're able to, cover your trade, and we were covering above the swing high. When this kind of thing happens, when you actually start to re-break the lows, well, then you can take your stop from way up there where it was 500 some odd dollars and actually start to bring it in. Maybe not to break even just yet, but certainly you can reduce a lot of that initial risk. So even though you may start off with a huge risk, that's just your safety net. That doesn't mean it has to stay there. Steve is asking for my email. For those of you who would like to email me, it's eric@supportandresistance.com. Okay, speaking of first micro macro crosses that you're never sure about taking, here's a first micro macro cross right here. So here, we'll use this as our example. Got to cover it up there. There we go. Oh, we actually got slipped a tick on that. I'm going to try to run this one out a little. So again, high probability signal, but the structure of the trade not very pretty. Okay, one more tick and we've hit our break-even trigger. No, don't hit the break-even. I've eliminated it, of course. It's only reasonable to expect the buyers to step in here somewhere. And it's always nerve-wracking when you're looking at a market like this. Very often what I like to do is I like to draw a trend line on it. So I'll draw a trend line across the low. We'll shoot a trend line across the highs. And what this does is it allows you to see where the market starts to get shallow. If we start to trade higher from here, that shows us the sellers are losing their grip. Stuff that isn't always obvious without the trend line. I could even draw it like that. Well, maybe I should have left the break-even trigger on, so I'm going to force this trade to break even now. Come on. There we go. So our first micro macro cross signal once again hit the high probability target. So it was a matter of taking the probability of the trade over the how the signal actually looks. Oh, and they backed up there enough to hit the break-even stop, but that's all right. Let's see here. All right, Andrew's asking, can you please take a look at crude on the Falcon and tell me what you think? All right, so crude kind of waffling a little bit. Here's the, is that the overnight low? Well, here's yesterday's lows. So we're not too far off yesterday's lows. A little bit of a rally up, trend change signal, market came down, tagged the median line, or just shy of the median line. And now it's starting to get a little bit more bullish again. Right now, Andrew, we're working a possible late filter entry signal. Ooh, and here they come. There's obvious support down here. This is the part that bothers me. Late filter entry signal is a high probability signal, which again is one of these signals. Do I trust the signal or do I, trust myself? Well, very often the signal is going to be the stronger of the two. I would like to see this. Personally, I'd be a little bit more comfortable with watching this signal fail and come back here with a buy signal. That would give me a little bit more comfort because crude oil, choppy as it has been more in an uptrend of late. So to me, a market that's in an uptrend, whenever you get a pullback, that really starts to look like a flag, a bull flag. So I would be anticipating the market to resume that uptrend sometime, even though what we're seeing on this screen right now is very representative of a changeover in the trend. So let's put that on the shelf just for a second, and we're going to take a look here at the same market now on the Eagle, where we kind of get a bird's eye view. So we've retreated here into the hard edge. We actually did print one signal against the hard edge. We should anticipate a retest of the high before we get another failure signal. We're changing from trend mode to swing mode in a few minutes here. So no signal just yet, but I would favor or prefer a move up. Oh, well done. Andrew says he got in there with a scalp, took 5 ticks. Good job. Yes, I guess I was a little bit late. I just looked at the timestamp. The trendline touch is a reliable signal in the Falcon. Andrew says he likes the trendline touch signal. And it is. It's a reliable signal. It's just your basic with trend signal. The market, the buyers try to change the trend. The sellers say, nope, we got this. And they just keep forcing the market down. So anytime you get into that trend line and you come out with a trend line touch signal, that's a fairly reliable signal overall. You can see here on our Geiger counter how the market is waffling between the buyers and sellers, back and forth. And from our earlier snapshot of the market, you can see we're now here near the lows or near the bottom end of the trading range. And we've started to flatten out. It's at the top of the hour. Yes, it is. So we've established our opening range for the morning. Here on the Raptor, I would consider a soft edge buy. Why? Well, because we have, this support here near the bottom. We have had a teeny tiny retest of the low. The lows are still holding. It's reasonable to assume that the market may try to retest the top end of the trading range. That gives us a probable little trade there, providing, of course, we get a signal. Come on. Oh, Tony says, I missed it today, but soybeans did it again today. What was that, a huge rally? Did they rally up or did they rally down? And while I'm waiting for Tony to respond, because, oh, actually I could throw soybeans on here. Oh, they went down. Hooray! I was looking to short soybeans today on my my position trade. I'll have to see whether or not I got a fill on that. Ryman is asking about these green lines that I have on here. This is, again, an add-on. These are the initial balance lines from Indicator Warehouse. Now, the initial balance lines, they're kind of cool. You can actually set all kinds of lines. You can set retracements, extensions, all kinds of stuff like that. What I do is I just set the opening range high and low. These are very similar to the first hour high lines that Jim has, except Jim's lines don't resize with the screen. That's the only real difference. But the initial balance lines, they show me the opening range. Actually, I'm going to put soybeans back into the mix here, because it is the time of the year for beans. All right, so we got the soft edge buy signal. It came a little bit late. I was hoping it was going to print somewhere around here. We'll put that back on the shelf. And here on the Hawk now, we're producing a green bar sell and a possible trend change signal developing here on the Falcon as well. But no denying that we have a pretty strong downtrend today. So here's a green bar sell signal. I'll cover it to the crest here in the macro line. Oops, signal didn't print. Actually trying to become a first micro-macro cross higher now. Look at that. So here's the nice thing about trading soybeans. Once the market settles on a direction, it pretty much stays with it. Oh, actually the Eagle, not the best example. Allow me to bring over the Falcon here. It'll be a little bit more obvious. There we go. That's what we're looking for. So the downtrend actually started here in the wee hours of the overnight session. Got the trend change signal right there, and they never really looked back at all. And they just plod along. Must have been some sort of report or something released here at the start of the Asian session. That's odd to get that much activity going on in that short a time at that time of the day. Oh, I think Japan had some sort of announcement or something yesterday. All right, this is actually a little bit choppier than they normally are, but soybeans opening yesterday, you get a trend change signal, nice move lower, trend change signal, nice move up, trend change signal, nice move lower. Well, took a little bit of heat, but it got you there. And then today, just a very, very smooth progression lower. That's the way. I like it. Yeah, soybeans, they do have a tendency to do that, though, to be a very, very good trending market in season. In season, during the early part of the year, January, February, they seem to be pretty stagnant. Oh, crude oil still fighting the support zone. We did print the late filter entry signal. In fact, we printed it right here. Can I cover it up there? Ooh, I can. All right, well, here we are back on the median line. Are they going to poke through? Are they going to get down there to 46.05? Hit our break-even trigger, if we're using one. If not, I would seriously consider going to break-even at this point. Just because it seems they're starting to take some heat from 46. Come on. So when I was looking at this trade, I would shorted it rather reluctantly. But based on the probability of the signal, the late filter entry signal is like that first micro-macro cross in the hawk. I know it's just such a high probability signal, I have to take it even if I don't want to take it. And it looks like at worst my trade would be at a break even right now. But I think it's probably going to dip low enough to at least find the profit target. Oh, they're going to kiss it here in a second. Now I would take my stop from break even and I would roll it in above this high, and there we go. We squeeze the trade and we hit the profit target. That happens a lot. And what I mean to say is, even though you can't necessarily see the opportunity, the DTS system can see it. And sometimes you just have to have the nerve to take it. All right, speaking of having the nerve, here's another first micro-macro cross signal. Now you could take it here, you could take it below the low. You know what, for the extra couple of ticks, I'll take it below the low, I'll cover it above the high, just in case they make a little hiccup here. And as per our earlier example, even if we had shorted here, and we had the huge stop, we would have rolled our stop to here on this breakout. And then when it broke down through here, we could now roll our stop to here. Or we could even protect some open profit. There's a fair amount of open profit here. But at the very least, we could roll our stop to here. And it would be a pretty good day. That's at least a $200 move for the NASDAQ. Okay, now we're fading that first micro-macro cross signal. It's heading a little bit higher. It's actually going to print right here. Again, I got to try to cover the trade. Oop, let's get the trade on. Got to try to cover the trade a little bit further away. And some of that earlier momentum seems to be waning. Come on, sellers, if you're going to do this. Okay, I'm going to try to run this one out again because I'm just in here with a single. Elmer is asking, I'm watching the FXCM NAS 100, which is always about 5 ticks different. So the basis must be different. What could it be? You may be watching the cash index. This is the futures. This is the June contract. If you're watching the cash index, the cash is always going to be a little bit different because it's instant, right? That you're trading the NASDAQ value today. And here in the June contract, well, we're trading the value of the NASDAQ in June. So the cash index will always be slightly different than the futures. Some people, I don't know if there's value in this. I haven't done it for a very, very long time, but some people watch the cash index trying to gauge what the market will do. So for instance, Elmer, can you tell me what the cash value of the NQ is right now? Just roughly. It doesn't have to be to the tick. I just want to know if it's above or below where we are right now. So 43.49 half. Pardon me. So 43.49 half. So the cash is up here. Now what some people believe is that the futures will go toward the cash. So if the cash is, let's say the cash was, it was probably down here, and then all of a sudden the cash started to do one of these things, and now the cash is trading here. Some people believe that the futures will adjust to meet the cash. But like most things trading related, it works until it doesn't work. Prices do tend to normalize over time. If we were watching the September contract, the value would be different again. Okay, so it looks like we got slipped a tick here or two on the short. Got a little bit of a pullback. Now they're trying really, really hard. So my break-even trigger was right here at the lows, so we would have hit the break-even stop. I could cover the trade to here now. If it rejects the low, it's probably going to try to take out the high, so I may as well bring my stop in tighter. Now we've hit the profit target had I had it in place, but I'm going to try really, really hard to run this one out just a little bit more. Come on. Come on. Just give me this one bar and I'll take the trade to break even. Just that one bar. Come on. Come on down. Here, we'll help you. Pull you down a little bit. There we go. Come on. You can do it. Come on. I'm over here. Come and get me. There was a fair amount of volume exchanged here at this last swing low. The buyers are probably starting to dig in. I'm going to force the trade to break even. There we go. Shoot. Yeah, sure. Now you're going to go. Stinkers. I was a little bit too quick on that. Doggone it. Well, we all have bad habits as traders, and you've just seen mine. If I do anything wrong in trade, well, one of the things I do wrong is I will tweak myself out of a perfectly good trade. Yeah, Tony says, have you had your meds today? Yeah, I know. It's one of those days. It's a wacky day. It's almost Friday. Woohoo! I got lots going on today, too. After the room closes, I'm a busy boy today. Oh, you stinkers. Yeah, there they go. Doggone it. Oh, well. They, I could hop in again. You think, oh, well, the market's heading lower. I'll just sell, just hit the sell market. That's doable. Again, you just got to keep your stop far enough away that the market can get a little bit of traction. Or you can wait for the next signal here on the Falcon at the same time. This would have actually been a better signal. It would have forced me to be a little bit more patient with the trade. Had a nice little trend change signal. So the trend line changes from green to red. We got the down, we got the up, we've got the down. All right, so several good opportunities today. Definitely a good trading day today. Crude oil slowing a little in its decline. Still fighting that whole support area around $46 a barrel. Gold trying to get more bullish. We're likely to see a retrace in the NQ sometime today. I don't think it's going to be a major retracement. Shouldn't get too crazy about it. But just from the sheer momentum of the thing, compared to what we saw earlier, it looks as though we're starting to dry up a little bit. Notice here on the Raptor, or any of the volume, equivolume bars, we're getting some pretty substantial volume coming in here. You might even consider this here like a double low, a double bottom, however you want to view it. And what happens, as with any support or resistance area, we're looking for the violation. So we got the break. Now we're looking for this break to hold. If that break does not hold, we can probably anticipate the market to go the other way. All right, so now we need to see some selling action. We need to see the sellers get in there and defend their position, or we're very likely to see a rally. Right, we don't have the little test of the extreme yet. If they come back here now with another buy signal, that could be a soft edge buy. I would entertain buying that. In fact, I'll get ready for it. And given the strength of the trend, I'm not going to get crazy about my profit objective. If we see 43.50, that would be huge. That would get us back here to the hard edge. So currently we're working on that little pivot, that retest of this low. Come on. Ooh. All right, they're waffling. Wow. Are you really? All right. I'll short you below the low. Obviously, I'm late on this signal here. So this little swing through here is basically a retest of this area right here. You should never micromanage these types of things, because the market isn't going to play it exactly to the number. That's a mistake to think that the market needs to retest exactly to this level, and as soon as it breaks above, well, then it's no longer valid. No. The fact that we continue to make lower highs is what's more important. We continue to make lower lows. That's what's important. All right, so I've got to stop and play. We're going to hold that for a moment. And I'm actually going to hold it a little bit deeper. Had I taken my entry on the hash mark, I would have hit my profit objective already. But I chose to postpone my entry until we got below here, which is the reason I'm trying to keep my stop a little bit further away. All right, so we've hit the first profit objective, and we're about, actually I'll delete the break even. There we go, we would have just hit the break even trigger, so I'm going to roll my stop now to that swing. And what are the parabolics looking like? I like parabolics. Sure, let's go with parabolics. You know what? Because I'm a chicken, I'm going to take it to break even. There we go. Come on NQ, keep going. Don't be stopping now. You could, obviously you can do a runner in any of your other tools as well. This is another instance. The market is obviously trending today, so it's not a bad idea to have a runner in play if you can swing it. Get a little bit more out of the trade. There they go. They're trying. Where's my next stop? So we're through the secondary support. Next stop, 43.22.5. And after that, we're down pressing 4,300 and 42.89.5. That would be a pretty substantial decline for the NQ. That would be huge. Oh, darn. They're going to tap me here on this little swing. Yeah. Oh well. It was still a good effort. I didn't feel like leaving my stops too much further back than that. Oh yeah, Tony, you're right. Tony's been making note of the influential levels in each day, and yeah, you're correct. Tony says we're back at some influential pricing here around the 43.30, 43.20 area. Yep, see you later, Andrew. Catch you tomorrow. Oh, and it looks like that little swing is going to cost me on this one too, as they're coming back here and beating up on the lows again. Doggone it. So that's twice now I got tagged on a little reversal. At least with the Raptor trade here, I did make the initial profit on the runner, or pardon me, on the profit target, and then got tapped on the runner. Okay, so here we go. We're getting a little flat again. And the buyer's definitely starting to dig in a little. Well, they're kind of drying up a little bit now as we near the top of the hour. Okay, I think we're going to close up the room here, but what I'm looking at is that the momentum really seems to be falling off. Sorry, I was looking at another chart thinking we may have an opportunity there, but it didn't materialize. The momentum seems to be coming out of this market. Now, that's not to say we should get crazy about buying. The market is definitely in a downtrend today. But because we're losing some of this initial momentum, when you go short, I think it's important that you keep that stop a little bit further away, at least initially, because there could be an uptick here. If we take a look at the eagle, no, actually we're not as close to that trend line as I thought we were. If we shoot a trend line from here, though, we're getting a little bit closer. So it almost looks like these two lines here are containing the market a little bit better than the broader one. But if we happen to start sneaking above here, well, we're going to break the soft edge. We're going to get into the hard edge, right? So I'm thinking if we do see a retracement of sorts, it may be getting up into that hard edge. What I don't like to see from a market is a break and then the market just kind of go blah. You know, we broke out here. The Raptor shows it pretty clearly. We broke out and now we're blah. Broke out, little blah. So the blah is getting bigger all the time, right? Here was a nice breakout, no blah, just a retracement, boom, let's do it again. That was fun. And now it's, well, okay, getting tired. This makes me think a move back to the hard edge is probable, but the trend is definitely down today. I would not be getting too excited on any buy position. You need to be very cautious if you're going to be entertaining a long. All right, you guys, we're going to close up the room then for the day, and I will catch up with you tomorrow. Hopefully it'll be another good trading day. And yeah, it'd be a nice way to end the week. Been a pretty good week overall so far. All right, we'll talk to you tomorrow then. Bye for now.